Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping back down into the charts for Harmony 1. Let's see what's been going on most recently and what I think is likely to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. And if you're looking for a little bit more from the crypto space, whether that is bull run strategies, bear market strategies, project reviews, AMAs with Chris and myself twice weekly, or just a little bit more on trading, why not check out the Patreon services as well down in the description of the video. Okay, let's get into this. Right, Harmony 1 paired up with USDT, hourly chart. Binance is a data source, and we've seen a lot of volatility. Okay, we've seen this overextended C wave drop down, and it's a 335 subwave count, and a lot of this is actually spurred on from the kind of things that have been going on the ecosystem, things around the DAOs, things around DeFi kingdoms, etc. Right, so I don't want to kind of go into the kind of fundamentals of things, but basically we've seen a mass sell-off, and as a result you kind of see the price come down. Again, this is because supply and demand, when there's a surplus of supply and very little demand to buy, the price has to go back down. So what I'm thinking is that we are still looking at the range here. This hasn't really changed. We've moved up again for a fourth wave bounce. Invalidation would have had to have come up significantly higher, around 9.875. Let me just check to make sure that's right. 9864, sorry. Okay, so we would have had to have come down as low as that in order to be able to or go up as high as that in order to be able to invalidate the move. So that hasn't happened, and as a result we should be thinking of the lower range, right? 0.06039 through to 0.06589 as seen on the picture here. Okay, so that's where we're looking for this fifth wave to drop down to. Now on the stochastic RSI, let me just tidy that away, we can see that we are looking for the correction. The correction seems to have started already. The 4 hourly is already overbought, the 8 hourly is just up in the overbought, and the daily has actually started to move out of the oversold area. So a pullback here is incredibly likely in my opinion. So we are looking at this range quite seriously. This would put, if I grab hold of my percentage from our current price, a pretty reasonable 20 or so percent. So something that I think that is important that we understand that is very likely to happen, and we want to kind of make sure that we're on the right side of that, either looking to sell or to accumulate, all that kind of good stuff. So do what works for you. And obviously I'm not a financial advisor, I can't give you financial advice. What I can do is tell you what I think is likely to happen here inside the charts based on that 8-way theory. So essentially that's kind of what we've got, right? And I think this is a probable area that I think we're likely to go down into, and it could be another fantastic opportunity of accumulation before we start to see the reversal upwards. Now time wise, I would expect this to take about 48 hours or so, but it can be quicker, it can be slower. Ultimately Elliott wave theory doesn't really predict time. What it can do though is tell you the sentiment of the people in the space, and it tells you kind of where they are likely to sell, where they are likely to buy based on Fibonacci based numbers. Okay, and the relationship between the waves and those Fibonacci numbers. So essentially, I don't know approximately how long this is going to take. I would estimate about 48 hours, a couple of days, and this would basically coincide with what's going on with the Fed meeting on Wednesday, and that could basically put us up into a really strong position ahead of that. So essentially, if we think about it, the Fed meeting historically, when they kind of talk about things, the price usually reacts negatively, and then people will assess whether or not it's good or bad, and then it will either go up if it's good news, and down further if it's bad news. Okay, but normally there's an emotional reaction to start with, and I think that will basically finish off this move. And I'm actually personally expecting it to be good news that basically takes crypto out of these low ranges, because we're expecting a reversal in the market, and that kind of comes in at about 36k Bitcoin. It comes down here at about 6 cents for Harmony 1, for example. So I would expect a reversal in the market by Wednesday evening UK time. So it'll be interesting to see how that plays out, and that's just kind of what I'm thinking is likely to happen based on all these waves that are appearing here inside the charts. Now when we go to a little bit of a higher time frame, you can also see this deep correction. So basically I've marked this up as a fifth wave high, okay, but it is possible that actually we're in some kind of expanding flat correction or running flat correction that has not yet completed, and the fifth wave still has to go up higher. But with that move up, it has actually reached the minimum level of 33 2.2 cent. But I still think that if that is the case, we are still likely to go up higher because things like Bitcoin haven't actually reached their 5th target highs yet. And that for Bitcoin comes in at about 78,000 to about 108,000. Okay, so there's a bit of a room to grow, and as Bitcoin grows, altcoins grow, and I would expect Harmony One to also come up into new all-time highs. So whether or not we look at this as a 5th wave high or a 5th wave that's not yet actually come in, or whether this whole thing here is actually now just corrective structure waiting for the next kind of bullish 5-wave structure to appear. There's lots of things to kind of look at from a macro scale, but where we are right now seems to be a pretty low point. And also I want to kind of just articulate that at these particularly low areas in terms of the price action, we've dropped down pretty reasonably, right? If we come down to this low range, right, if we go down to 6 cent or 6.5 or 6 cent, then essentially we're talking about an 84% drop, which is very, very significant. Now, bear market lows historically have been about 90 to 95%. So when we start talking about an 84% drop from the all-time high, all I start thinking about is, am I waiting for the additional 10% drop, okay, that may or may not come, or am I going to start dollar cost averaging into my positions now at an 84% drop, right? These are the kind of thoughts that go through my head. I think what kind of level of discount are we looking for here? Is an 84% discount not good enough? Do we really need a 95% discount? And do we think 95% discount is coming? Just because it's happened previously doesn't necessarily mean it's going to happen again. We've got to bear in mind that the market conditions are incredibly different, right? We are no longer just a couple of $100 billion market cap. When I think 2017 was about 750 billion, we are now 1.7 trillion. Okay, so we've added $1 trillion to the market cap of all crypto. So if we think about this, are we likely to see 95% again? The market has changed, different players in the game, a lot more altcoins are in the game. Do we think 95% is probable or not? Or am I happy to start dollar cost averaging at 84%? So really think about these things. I can't answer them for you. As I said, I'm not a financial advisor. But personally, when I see things like lower than 80% from all-time high, if you're a long-term holder and you have long-term vision, I mean, that just seems like a pretty interesting point to maybe start considering entering into positions, in my opinion. But that's what it is, my opinion. So guys, just to kind of summarize everything a little bit here, let's go back down into our hourly. Okay, we've got a move down to the lows of 6 to 6.5 cent, in my opinion. I think this is likely to start soon, and we'd like to see that pull back. It's going to approximately be about 20% pullback. This should happen in line with Bitcoin going down to about $36,000, and it should happen, I think, in the next kind of 24 to 48 hours, in my opinion. But timing is always the hardest thing to gauge. Longer term view, we're looking to finish off a corrective move, and an 84% pullback is very, very significant. So dollar cost averaging right down in this low point here, where I do expect a reversal to occur, might not be a bad idea. But make sure you do your own research. Do not pay attention to anything I say or do, or treat anything I say or do in this video as financial advice. It is not. I am not a financial advisor, and I cannot give you that advice that you're looking for. However, if you do your own research and you come to your own conclusions, fill your boots. Guys, I'm going to leave the video there. If you find this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe? Tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.